Every trader wants consistency. They want to see their equity curve rise like a staircase. They want to look at their trade journal and feel a sense of rhythm. They want to feel in control. They want to know that what they're doing is working. But here's the trap. Most traders chase consistent results without building a consistent mindset. They look for the perfect strategy. They tweak indicators endlessly. They blame volatility, the news, the spreads, the brokers. And every time a few trades go wrong, they assume the system is broken. But what if it's not the system? What if the inconsistency isn't coming from outside, but from within? What if the real edge isn't just in your method, but in your ability to apply it the same way no matter what? Mark Douglas, in Trading in the Zone, writes something deeply overlooked. You must learn to act in a consistent way, regardless of the outcome. Let that sink in. He didn't say feel consistent. He didn't say believe your trade will work. He said act consistent. Because your behavior, not your belief, is what the market responds to. The market doesn't care if you're scared. It doesn't care if you're excited. It doesn't care if you've been on a losing streak and deserve a win. It only responds to one thing, your decisions. And when those decisions change every time your emotions shift, you're trading noise, not edge. Let's be brutally honest. Inconsistent actions look like this. Taking bigger size after a loss to make it back. Is skipping your checklist because this one looks obvious. Widening your stop because you're sure it'll come back. Trading before your setup completes because you don't want to miss it. Exiting early on winners because you're scared to give back profit. These seem harmless in the moment. They feel logical. They feel safe. They feel emotionally relieving. But in reality, every one of these decisions is the seed of long-term failure. You're teaching yourself that emotions are your strategy. You're replacing probability with impulse. You're slowly eroding your ability to trust your own process. Worst of all, you're making your trading results unpredictable and unscalable. Because if you can't act consistently now, what happens when you size up? When real money is on the line? When pressure builds? Mark Douglas titled his book Trading in the Zone for a reason. The zone isn't about being on a winning streak. It's not about feeling invincible. It's about entering a mental state where your actions are automatic, rule-based, emotionless, and grounded in trust. Trust in what? In your process. In your statistical edge. In your ability to execute, regardless of outcome. Most traders try to feel their way into this zone. But that's backwards. You don't get into the zone by feeling confident. You get into the zone by behaving consistently, even when confidence is nowhere to be found. That's what makes professionals different. They don't wait to feel good to trade well. They act well and let the feelings catch up later. Casey was a decent trader. She had a clean edge. Only trades 2-day pullbacks in trend. Awaits for a bullish engulfing candle. Set stop at swing low. Aims for 2.5 or target. Won or risk on every trade. And when she followed it, she won. But then came the drawdown. 3 losses in a row. A missed winner because she hesitated. A breakout trade that faked her out. And suddenly, she tweaked everything. She started entering earlier. She cut 1 trade short. She skipped 2 good setups because she was scared. And in just 9 days, she'd undone 4 months of steady progress. Her journal was a mess. Different position sizes. Random entries. Conflicting setups. Emotion-filled notes. On Sunday night, she sat in front of her trades and color-coded them. Green, followed her process exactly. Red, deviated, second-guessed, overrode rules. The pattern hit her like a punch. All her profitable trades were green. All her biggest losses were red. She wasn't losing because her strategy failed. She was losing because she did. Inconsistent actions. Emotional decisions. Disconnected from process. So she made a single decision. From this week forward, I will trade like a robot. If my setup's not there, I don't trade. If the checklist isn't complete, I don't click. She printed her checklist. Pinned it to her wall. She preset her position size. She committed to journaling her emotions, but not trading from them. The first 2 weeks felt weird, unnatural, robotic. But slowly, she saw clarity. Fewer trades. less stress, cleaner charts, tighter execution. 3 months later, her equity curve showed plus 21% gain. But that wasn't the real reward. The real reward was the inner peace. She no longer needed trades to work, to feel successful. Because her success came from doing her job right, not from what the market did after. Here's the paradox. Most traders know what to do, but they don't do it consistently. Why? Because they haven't emotionally accepted randomness. When a trade loses, they panic and think, something must be wrong. When they win unexpectedly, they feel, maybe I don't need rules after all. They confuse results with skill. But Mark Douglas said it best. You can be right and lose money. You can be wrong and make money. Until you deeply accept that, you will constantly try to control what cannot be controlled. The outcome, the speed, the payoff. And every time you react to results instead of executing your plan, you break consistency. You trade like a different person every week, and wonder why your results bounce like a ping pong ball. So how do you actually become consistent? Here are 6 foundations. 1. Define your edge clearly. If you don't know what you're supposed to do, you can't repeat it. Make your rules objective. Entry trigger, stop placement, target, risk size. 2. Commit to one process for 20 trades. Don't judge based on 3 wins or losses. Decide in advance to track your process across at least 20 setups without interference. 3. Use a pre-trade checklist. Don't feel it out. Use a checklist that must be fully green before execution. 4. Journal your emotions but not act on them. You can feel fear, greed, doubt. Just don't let those feelings change your actions. 5. Separate outcome from identity. A losing trade doesn't mean you're a failure. A winning trade doesn't mean you're invincible. Your worth is in how consistently you execute. 6. Forgive. Adjust. Repeat. Slip-ups will happen. But instead of quitting or system hopping, ask, where did I break consistency? And fix it. That's how pros improve. Here's the hard truth. You cannot achieve consistent results without first becoming a consistent person. That means acting the same in a drawdown, sticking to rules during FOMO, clicking the same buttons, even when your hands are shaking. Because success doesn't come from magic trades. It comes from repeatable action, from trust in process, from the quiet power of doing what you said you'd do, again and again, until results follow. In the end, the traders who make it don't have perfect predictions. They have perfect consistency of behavior. And that, over time, beats everything else. Want to become consistent? Start here. Print your checklist. Define your edge. Commit to 20 trades without deviation. Track your process, not your feelings. Rate yourself on execution, not outcome. Because when your actions stay the same, your results will too. And eventually, they'll compound into everything you ever wanted from this game.